All right. Morning, everyone. Let's kick it off. All right. Friday we had a push higher again out of U.S. equity markets. Not too big of a move. We had a less than a 0.25% move out of the S&P, not quite a 0.5% move out of the Nasdaq, but the Nasdaq was leading the way again, which I think is somewhat significant. We had some of the internet stocks and tech stocks that helped push the market higher. eBay, Amazon, um, rising sharply on the day. We've obviously started U.S. earnings season. We've got U.S. Steel that rallied after duties were imposed on foreign steel imports, and then Wells Fargo pulled back on its earnings. But we've got a whole slew of earnings that are coming out today in the U.S. This is going to be a really important day for earnings, or a really important week for earnings and for data. We've got Citigroup that comes out today. A lot of people really looking to get a gauge of some of the international, trading revenues from some of the big trading groups, and I think that's going to be important, and how guys are going to kind of judge the rest of that sector, and really set the tone for maybe earnings season coming on the back of that. If we look at Asia, we got a rally across the board overnight. All the markets really in the green. No probably real reason in particular, other than just on Thursday, a lot of people were obviously very nervous about the Portuguese bank story, and those fears kind of subsiding on Friday and on over the weekend. Real other threats popping up their heads, and maybe just a little bit of a relief rally, some short covering on the back of no follow through because of that. In Tokyo, we saw some of the telecoms and things like that trading pretty well. We had the automakers and things trading well in Shanghai, and then miners were leading the way in Australia. But like you said, this really just kind of a bit of a relief rally. Probably not a whole lot to really, that gave us a catalyst to push the markets higher. Probably more relief than anything. All right, we got a cool chart here by J.C. Parrots from All Star Charts, showing the seasonality in the S&P 500, and this is real interesting because you kind of get into the sideways trend for the middle part of the year. Typically, we get a bit of a pullback into the August, September, October region, and that's really where we're getting into. You can see here toward the middle of July is when we start to see the pullback typically in equity markets, and we still move out a little bit to the right, and then kind of getting to the bottom there toward the end of October, and then we typically really rally into the end of the year. And seasonality, I think, in equity markets, if you've done any reading about this, is no joke. There's a lot of reasoning behind it, historical reasoning. There's a lot of things to do with the seasonality of how everything revolves around the times of year, and the farmers hedging crops and only getting cash delivery when the crops are paid, et cetera, et cetera. It goes all the way down to a lot of the other industries and activities that create the seasonality effect. So I think that this is just a real interesting chart in my mind. If you've ever read about the reasons behind these typical seasonalities that we see in equity markets, I think that it gives you a reason to believe that it's going to repeat itself as many times as it has over the past. So, all right. Moving on, let's look at corporate action for today. We've actually got a lot. Like I said, we've got Citigroup a little bit later. We've got David Jones shareholders also. They're going to vote on Woolworth's takeover bid today, probably most likely to get approved. We've got Steinhoff that goes X rights today, and so you're going to list that as NPLs today. We've got Netcare, Lewis, and Omnia, which are all paying divvies out today. So don't forget those if you're involved in any of those shares. All right, market data, not a whole lot. We had industrial productivity and capacity utilization out of Japan. They're all better than prior numbers. And then we've got industrial production out of the ECB a little bit later. We've got a slew of data coming out in the States later on this week. Actually, a reasonably big data week. We've got the the Fed that's got to testify, or Janet Yellen who's got to testify in front of Congress, probably going to get a lot of new information out of that because they'll really spend a lot of time picking their brain. So from that perspective, there's going to be a hell of a lot that goes on over the course of this week, most likely. All right, let's get into the maps. All right, the first thing that we're going to look at, we'll keep it a little bit short because even though we did have some movement on Friday, there's just not a whole lot opening itself up at the moment to any sort of new looks. All right, so look at Germany. We'll look at the German market again because this has really been the leader in the European session and can follow this one around quite closely for the most part. Like we said on Friday, dropped the support level convincingly. Friday, the equity market was also off even though the rest of the markets were better. I thought that was interesting. Then we've got another little level of support coming in here, which is actually where I think we first broke up from. Kind of came back down, tested it here, and pushed higher again on the breakout, and that's exactly where we're testing at the moment. I'd like to draw this because this also comes in line nicely here with a little bit of lateral support, which is right around there, just above 9,600. And so I think these are the two levels that, just to make it look more perfect, we'll just draw it like that. I think these are the two levels that we want to look at right now in the DAX, and that's the 97.75 level and the 9,600 level. So watch those two levels close. If 9,600 can drop, I think that we can actually sell off in equity markets. If 97 holds, along with the DAX, to me that's going to be convincing that we push to move higher. So watch these over the next couple of days. I think they're going to be important. All right, if you look at BGA, you can see BGA bouncing right back up here about 165 to retest the same sort of level that we've been testing. Let's just draw this from this wick just to make it look kind of encapsulate the top end of these moves. I think if we get above 165, we're gonna end up having another nice move to the upside. Really, it's been incredible. All these banks have just pushed up here and consolidated. And like we talk about all the time, usually the move that comes out of the consolidation is in the same direction that it came into the consolidation from. So definitely looking more likely to move to the upside than not. But it's got to get through 165. If it gets through 165 on a closing basis, this is going to go probably quite a bit higher. Let's look at AVI. We'll back this out to let's back it out to a 5-year. I'll zoom it forward a little bit. And we always talk about how the longer term setups have more impetus than the shorter term setups. And you can really see here very clearly defined breakout, obviously that's happened here when we really just got another push to the upside as of Friday's close, and you can see there really just popping right back out to the upside. And if we really get a little bit shorter on this, you can see that we've been consolidating for the most part just right on or maybe a touch below and above this support line, or what was resistance now becomes support. You can see there that we've popped up above that little consolidation on closing basis. This is really indicative of a bullish setup where you break out, you consolidate just on top of the breakout, and then you really make your push higher. So a very bullish setup here in AVI, definitely setting up to move significantly higher out of this setup. All right, we're going to look at Exara. I know we've shown this chart about 100 times over the past maybe 4 or 5 months, but we finally got a real close below the 137 level. Not going to promise anything here, but 137 is without question the level. You can see there we kept dropping on an intraday basis. We could never really close below it, and then finally on Friday's session we closed at 136.18. So I think that this is quite significant. We've just made this monster descending triangle down into support here at 136, and it finally looks like we're breaking a little bit lower. So I think we take this, maybe watch and see if we can get a little bit of confirmation. But the bottom line is, if we've broken a major support area, if we get a little bit of a push lower, it's just going to confirm that breakdown, and there's a much lower target on the breakout here in Exara. The last one I'm going to show is MTN. MTN hasn't really broken up to the upside of the flag pattern yet, but made a nice reversal off the 220 level on Friday. You can see there we closed at 223.10, and we're going to really need to get above 225 for us to lock in a breakout from this flag pattern. So that's the level we're going to watch for between 220, 225. We're going to either look for 220 to drop or 225 to break out before we make a move in MTN, and looking more likely like we're going to go through 225 and a breakout of this bull flag. And that's it for today, guys. Thanks a lot. Happy trading.